Hello and welcome to FinextraTV. I'm Alex Lipich, and kindly joining me in the studio today is Michael Engel, Managing Director and Vice President Banking Software at Diebold Nixdorf. Michael, it's an absolute pleasure to have you here with us.
Oh, thank you very much for having me.
Absolute pleasure indeed. And today we're going to be discussing the transformation from traditional payments to instant payments and looking at the technology around that as well. So starting off, Michael, how do you think do traditional and instant payment technologies currently compare in terms of adoption and efficiency? Let's start there.
Well, the figures tell us that instant payments is on the rise. However, the interesting effect that we see in the market that none of the traditional payment methods really go away. So, and this creates a little bit dilemma. So how you drive innovation on the one side while still maintaining the infrastructure that has been built around cash payments, card-based payments, and how do we deal with that? And just to give you a couple of examples what I mean with this. So we're talking to banks that have systems that drive their traditional payments and their traditional channels like ATM and POS as an example. And most of them have been built 30, 40, sometimes 50 years ago, mainly around the concept of cards. So you're using a card to authenticate yourself, you have the attached security, and then you're using card rails mainly to execute transactions. In the instant payment world, you have basically an account-to-account relationship, which doesn't use necessarily those card rails. So does that mean you try to now invent those capabilities into existing systems, or, which we see in the market a lot these days, you start building up a total new infrastructure next to your traditional capabilities around the existing payment infrastructure, which, and we will come to that a little bit later, has some challenges, of course, because you're all of a sudden doubling capabilities, capacities, infrastructure, know-how, and all of these kind of things. Now, on top of that, if we look at instant payments, it's really good, as the name says, account-to-account payment, person-to-person payment, to drive really that personal financial relationship between individuals. And it's fast, it's quick, people really like it, but it also has some downsides as of today. If you think about e-commerce, if you have a well-known vendor, a trusted vendor, there's nothing wrong with initiating an instant payment. However, let's remember, the second you have initiated that payment, your money has been transferred. If your goods never ship to you, you may have a problem. So the element of security that has been built into, for instance, card products for that good reason of running successfully e-commerce transactions, all of a sudden you don't have anymore. So it really depends on the use case for, can I successfully utilize instant payments? Does it make sense? Does it make commercially and security-wise sense? And is the infrastructure with the surrounding components, such as security, reversals, all these kind of things, really geared up for every task? And this comes back to an interesting observation, is that as we're adding instant payment to the landscape, none of the existing payment instruments is really going away. And coming back to my earlier statement, how do we manage that? How do we find a solution that is yet scalable and affordable? And that is one of the challenges that a lot of customers and financial institutions see these days in the market.
Really interesting insight. You touched on some of the challenges there, particularly the infrastructure as well. So how or what steps do you think can financial institutions take to develop a unified infrastructure, one that supports both traditional payments and instant payments for the consumer? Let's go with
Well,
that.
excellent point. And in order to do so, we looked at payments a little bit more holistically and said, well, you need to have an infrastructure that is much more agile, yet is constructed in a way where you create more and more isolated services. If you use the cloud native paradigm, which we have used as an architectural design behind you, you define so-called microservices. Within those microservices, you try to orchestrate dedicated, again, services, functions, as you will, that look at things more holistically. So if you do, for instance, consumer authentication, you want to look at it not only in the traditional way of things, like using a card and PIN for consumer authentication. You want to use a generic token that can be an account number, that can be a token, an alias, any kind of secure information that is deemed to be fit by the financial organization to authenticate yourself. So as long as that is a given, we want to process your demand for a financial transaction. And again, that can be traditionally a transaction at an ATM to get cash, at a POS system to pay something, in the internet, in the e-commerce space, or person-to-person instant transfer of funds in order to pay for dinner or whatever you want to do, or looking forward to use those rails with the additional value-added services around to even expand with the security elements that are needed to drive more flexibility and have alternatives to the traditional card rails. But designing it in such way gives you two advantages. So number one, it gives you the innovation and the agility to drive that innovation. But at the same time, you can, if you have to transform your way of payments anyhow, you can look at your entire payment landscape. So you can drive innovation in your existing payment infrastructure to renovate your 40-year-old system and move your existing cash and card-based transactions onto a new platform. But you can now use the very same platform also to establish the transaction processing capabilities for your instant payments as well. And if we look a little bit into the future and think about digital currencies, the digital currency, both in its online and offline format, will or have been designed in a way that is fundamentally an account-to-account based payment, using basically funding that is stored in a wallet, defined as a cryptocurrency. But fundamentally, that is what customers of ours are looking at. So how can I find an infrastructure that allows me to drive cost of efficiency, so don't have that silo-based infrastructure anymore, that whenever I try to do something, I need to find 50-plus-year-old people that still understand the programming language. Actually, let me rephrase that. If a system is 50 years old, they need to be 70 years at minimum. So you get the point. But that is a real-world problem, a serious problem for a lot of banks and financial institutions. So how to renovate that? How to become more agile, more cost-effective, but at the same time not again create new silos, but create a common infrastructure where you can drive your existing traditional payment transactions as well as instant payments today and digital currency transactions in the very near future. So we're driving this, for instance, with a partner, a banking processor in Europe, because they had exactly that challenge, how to consolidate their legacy system, their instant platform, their SEPA platform. So they had already 3 platforms, and now they were looking at the digital euro coming in 26, 27. Would that mean a 4th platform for payment processing? And that is where we have consolidated that in one cloud-native platform that has these kind of capabilities, the agility to drive really transactions forward.
Really fascinating, Michael. I could sit here and talk with you all day. And there is clearly a lot to think about here. It's a constantly moving, constantly evolving payment landscape, as you said. What about the strategies currently used by leading banks and processors to stay ahead of the game? What are the strategies they're using, do you think?
It's coming a little bit back to some elements that I mentioned already. So fundamentally, they look at the entirety of their back office. And what is true for their payment infrastructure is true for their core banking as well. So a lot of the leading financial institutions looking at cloud-native technology as a framework that can carry them, again, like the IBM host technology or tandem technology of the past, for the next decades to come. And that has been a foundation that apparently the industry has agreed upon. So great. So how to drive this transformation is a big topic, and that is what we have done successfully with very large banks, some of the largest banks in the world, but also with smaller organizations, because having a solution to go to is only 50% of the answer. Having a way to, in a smart, risk-mitigated way, to get you from A to B, to take these little micro steps really in this journey to renovate both existing traditional payment instruments and platform, but also build that infrastructure for the future to address instant payments, but also be ready for the next generation of the digital currency that are coming across the globe. That is really what banks are looking at. So finding a partner that can guide them on the journey, that has the experience of, yes, we have done it, and find a solution that can drive change at speed and scale. So I had the pleasure of being on stage with one of the most advanced leading banks of the world. It's a North American bank just the other day. And he gave me, the project lead there gave me an example, said, hey, in our traditional platform, it took us usually up 6 to 9 months to introduce a new feature, a new change. With the new platform that we have built together, they have introduced 300 new services just in the last year in a running environment. So you see the dimension of how are you able to adopt market changes, consumer demands, new customer journeys. That's the agility that you need to drive this kind of transformation. So banks are really looking at building that infrastructure, building the foundations that enables them to be ready for this kind of change.
Really interesting. It's all about, like you say, building that infrastructure, looking forwards into the future as best we can. And I personally will be really interested to see how things develop moving forwards. I just want to thank you so much for giving us that insight and for your time and for joining us in the studio today.
Oh, my
Michael.
pleasure for having me. Thank you so much.
Absolute pleasure. Thank you very much.